Greetings, ladies and gentlemen. First, the good news. According to the Society of Indian Automotive Manufacturers Association's data, the automotive sales jumped 30% between April to October this year in comparison with last year. Another recent report suggests 15 to 20% growth for auto sales next year, after which the sales will stabilize to reasonably modest figures. Another report, a PwC report, says that the Asia-Pacific retail growth is going to grow double the expected rate in the next 2 years. Well, high inflation in India will make it half the expected rate of growth, but still, in terms of demand, retail growth is really going to take off in India. Now, these are just two sectors, pharma, FMCG, commodity sectors are seeing a decent growth in recent times, which is expected to continue next year as well. Globally as well, in the US and the Europe, recession has, of course, the times have been a little tougher than those in the emerging markets. But the recession is said to have bottomed out, and certain sectors are seeing stability, and certain others are seeing a healthy growth. So it's fair to say that even these regions are seeing a fair share of demand fluctuations. Now the bad news, or not so good news. Now, in my recent conversations with LSPs as well as principal companies, they have said that in order to tap the growth that is being seen in the Indian market, it's becoming a little difficult for them, because during the recession phase, they had to shed a lot of weight, let go of a lot of key people, and then the growth came, and then they were looking around for talented people, for more resources to get more capital to tap growth opportunities. So this discussion is all about how to embrace growth opportunities suddenly as it has come to our doorstep, and also about the pressures that it's putting on the supply chain of the industries. To get a macro view of a growth, if any, and the fact that there are pressures on the supply chain, I would turn to Dr. Singh first and ask him whether this is all, the whole talk about growth and the pressures on the supply chain, is this all hype, or is there some reality or some substance into the concern as well as the projections?
No, this is a very interesting question, because everybody is euphoric about India. And it becomes very difficult to have a contrarian view about this, Anand. But if you look at the way we have grown in last couple of years, even despite the crisis, we had a little small downward dip, but we survived. And on the average, we have grown around 8.65, if you take, which has been a very good sign, and which is a good continuity, because if you look at economic trends, something which sustained from 2004 to 2010, despite the recession in the whole of the world economy, is a good news. But we, at the same time, need to understand that India's story, or the Asian story, or the growth rate in Indian economy and the Asian story has to be looked from a very objective point. All that Anand mentioned had, I think there's a macroeconomic bullwhip. I said this at the automotive logistics conference at Chennai. Not many people liked it. But I say it's a macroeconomic bullwhip primarily because when the time is good, everybody can enter, create capacity, and go on. And you can really think about it as if you are really doing a great job. What you don't understand is that even if India's story continues to be for long-term trend, there are going to be jumps and spikes. As they happen in your data, they will also happen in the economy. And these jumps and spikes needs to be taken care of. I also heard automotive story going at 30%. Somebody from Frost and Sullivan in that conference brought about a very interesting fact that the industry will grow next year also 25 to 30%, and then bottom out at 12 to 14%, where the demand for automotive increased from 2.8 million to 5.8 million. That is almost double, and hence he called for the industry to quickly run, create capacity and cater to the ever-rising demand for the demand from the Indian markets. Now there are certain things that I would say is not right. We survived in 2008-9 with a very strong macroeconomic fundamentals, which helped us to be decoupled from the world growth rates. At that point of time, we saw a very robust macroeconomic, whether it was inflation or it was interest rate. I think we were quite better off. Are we not at a risk at any point of time? And I thought I'll take the contrarian view, because sometimes when you look at the macroeconomic data, you only look at the linearity trend in future, and it's very prophetical. It's prophecy. You don't see the downward risk. Let me give you some amount of data. India's story is a great story. India says that we want to be, we're growing 8.75%, 9% story is floating. But if you look at RBI, quarterly review of money, very recent one, even Subara has been talking about it, but not many consultants across the globe have been, they want to really create capacities of, consulting assignments so that when they make it euphoric, they can take an advantage of that. One basic trade, we are internal. We have grown at 8.76%. Our growth exports have been even minimal in the world economy. Does India want to be remaining decoupled from the world export in the growth story in future? If you grow, and at what cost will you grow? If the exports are internal, we are now getting saturated. If you want to grow globally, there has to be interconnectedness, the symbiotic growth of India and the rest of the world. And if the recovery of the world market, the Eurozone on one hand and American economy on the other hand gets prolonged, please believe me, the downward trend may come in. And if you don't believe this as a major this thing, you have inflation rates today are around 7.65 or something around that. Come down drastically from the 10% of the 10% and more inflation rate to 7.2. But you know the full inflation in India has remained sticky at around 15%. People say it is a demand story. I will not argue. Yes, maybe it is a demand side effect and India market has shown a demand. But what will happen? A comfort zone inflation of 6% has to be taken care of. And what will happen? RBI will raise the interest rate in future. There is a down-term risk of interest rate going up. Come to the another macroeconomic fundamentals, fiscal deficit. It has gone up again from a level of 6.5 to 10%. And your infrastructure deficit is going to remain deficit if fiscal deficit is going to be a reality. Your current account deficit, 3%. It is same as 1991 level. Are we seeing these macroeconomic fundamental in managing our supply chain and deciding a supply chain this thing? And this is why I say, if you go linearly, you will plan for a capacity, plan for your supply chain facilities and logistics requirement in a linear fashion. And what I called in the beginning, you are going to hit a macroeconomic bullwhip. Are you prepared for that? All that downturn he talked about earlier and upturn, I think you need to know how to incorporate these factors in your supply chain decision making. And I think, we would conduct a workshop on macroeconomics for everybody who wants to learn this, because this is important. The whole macroeconomics, you are ignorant about the macroeconomics, you are managing your firm, and believe me, macroeconomics ignorance is not going to be bliss anymore. And the world has shown that. And I think, are we factoring that into our planning is a big question. All studies have been just euphoric and linear. I think they need to take short term. I'm not saying that India's story is going to be bad, but in the short term, we are overheating. And we were overheating in 2008 and 9 at the correction of 8 or 9 months, and it hurt everybody badly. And so maybe the story now. So be objective in using this data and understanding of the economy when you plan for India growth story in a big way in your supply chain decisions and also as a logistics service provider.
Thank you, Dr. Singh. So at least we agree on the point that there